There used to be a time where as a Brit, you could go to America and everything was half price. And that was because £1 would get you over $2. But today, £1 only gets you 109 cents. So what has happened to the pound? In response to the UK government's mini budget yesterday, the pound completely plummeted. As someone stuck in the United Kingdom, this might not seem like such a big thing to you. However, you have to realise that the exchange of currency is a very big part of the economy. Not only this, but the pound's value affects everyone, from holidaymakers to shoppers. Think about this, your new iPhone is going to cost more. Already the iPhone Pro Max is somewhere around £1,500. If the pound continues to fall, Apple are definitely going to raise the prices even mid-cycle. So why exactly did the mini budget reduce the value of the pound? So just in case you didn't know, the new UK Prime Minister Liz Truss announced a mini budget where they were actually cutting taxes of pretty much everyone, including low income earners and high income earners. Bankers' bonuses have been uncapped in a time where more tax money is actually needed to put back into the economy for things like capping the energy prices and reducing stamp duties on new homes. But that's actually not the only reason why the pound is going down so much. The other reason why the pound is going down so much is because the dollar is effectively just becoming stronger and stronger. During the pandemic, the United States of America printed more money than they ever printed before in one go, and this has essentially been a key factor in the inflation that we're seeing today. So one of the things that the US had to do in order to reduce inflation is to increase their interest rates. And because the US holds the world reserve currency, which is the US dollar, borrowing and buying dollar becomes more expensive for other countries, increasing the actual value of the dollar. So with respect to the pound, the dollar is becoming stronger, but also the euro is gaining on the pound. And this is because investors are skeptical that the mini budget will actually help the economy, because reducing taxes at a time where the UK is borrowing more and more leads to a very uncertain future. As the demand for the pound sterling reduces, the price also goes down with it. The demand for the pound and other currencies are affected by many different factors. If the economy of a country is strong, the currency is also strong, because foreign investors want to invest their money into that strong economy in the hopes of getting a great return. So if the UK economy is strong, the pound is strong, and more foreign investors will exchange their money into pounds, thereby increasing the value of the pound. Additionally, saving rates actually increase the demand of the pound. So if the Bank of England increases the interest rates, holding your savings in pound sterling becomes more attractive, thereby increasing the value of the pound. The country's prices of their goods also increases the demand for the currency. For example, if the prices of goods in the UK are cheaper than those abroad, that will incentivize foreign businesses to buy in the UK, thereby increasing the value of pound sterling. So investors always look at balance sheets before they invest into a company. So if a company is taking in too much debt and not making too much money, then that will incentivize investors to go somewhere else, thereby reducing the value of that country's currency. And finally, because foreign exchanges change pretty much minute to minute, speculation plays a huge role in determining the value of a currency. If everyone in the market sentiment says that the pound is just becoming weaker and weaker, that will lead investors to sell off their pounds, thereby reducing the value of the pounds. So all in all, one of those few factors are playing against the pound, and right now the pound is at a 37-year low. Make sure to check out some of my other videos, and I will see you in the next video.